Hello and welcome to Make Money Territory. Today, we dive into the world of Dogecoin and its recent market performance. Dogecoin, often fondly referred to as Doge, is a cryptocurrency that has been showing an impressive resilience in the face of bearish market sentiments. While other cryptocurrencies might have taken a hit, Doge remains steady, holding above the 100-day EMA mark and aiming to surpass $0.16. At the moment, it's trading at $0.1503, a slight gain from previous sessions. When we take a look at the bigger picture, Doge has a monthly return ratio of negative 13.2%. But don't let that deter you. Over the course of the year, Doge has shown a return of 89.27%. So what does this mean for Doge and its investors? Let's dissect this further. Let's begin by understanding the technical analysis of Dogecoin. In the world of cryptocurrencies, technical analysis plays a crucial role in forecasting price movements and trends. It's like a compass for investors, guiding them through the tumultuous seas of the market. Now, when we look at Dogecoin, we see a neutral price structure. This means that the coin's value isn't leaning heavily towards either a bull or bear market. It's in a state of equilibrium, if you will. But don't be fooled by this apparent calmness. The neutrality of Dogecoin's price structure suggests a potential for a significant pullback. A pullback is a temporary reversal of the current trend, whether it be up or down. In this case, Dogecoin could see a substantial decrease in price before it starts to climb again. But wait, there's more to this story. While it's true that there's been a decline in development activity around Dogecoin, we shouldn't overlook the derivative data. Derivative data refers to information derived from the underlying asset, in this case, Dogecoin. And this data is suggesting short covering. Now, what does short covering mean? It's when traders who have sold short, betting the price will go down, decide to buy the asset again. This typically happens when traders believe the price of the asset will rise in the future. So despite the decrease in development activity, the fact that we're seeing signs of short covering is a positive indicator. In essence, Dogecoin is like a sleeping giant. The neutral price structure might make it seem like nothing's happening, but the potential for a significant pullback and the signs of short covering suggest otherwise. The coin is merely gathering its strength, preparing for the next big move. This paints a picture of a cryptocurrency that, despite some challenges, shows promise. Now let's turn our attention to the volume to market cap ratio of Dogecoin. This interesting figure currently stands at 0.0879. But what does this mean exactly? Well, the volume to market cap ratio is a key tool used by investors to gauge the liquidity of a cryptocurrency. The higher the ratio, the more activity there is relative to the size of the market cap. So, a ratio of 0.0879 indicates a healthy level of trading activity in relation to Dogecoin's market cap. It means that there's a substantial amount of Dogecoin changing hands, which is a good sign of its liquidity and general interest among traders and investors. However, this ratio isn't the be-all and end-all. It's just one piece of the puzzle. It should be used in conjunction with other indicators and metrics to build a comprehensive understanding of a cryptocurrency's health and potential. This ratio is a critical indicator of the health and potential of a cryptocurrency. Another important factor in understanding a cryptocurrency's performance are its support and resistance levels. Now, let's dive into what these levels mean and their significance for investors. In the world of cryptocurrency trading, support and resistance levels are the price points where a crypto asset tends to stop and reverse its trend. These levels are formed by the buying and selling activities of traders. For Dogecoin, the current support levels are at 14.4 cents and 13.5 cents. Support levels represent the price at which buyers step in and start purchasing, thereby preventing the price from falling further. It's like a safety net that cushions the fall. If Dogecoin's price dips to these levels, it might be an attractive buying opportunity for some investors who believe the price will bounce back. On the other hand, the resistance levels for Dogecoin are at 16.5 cents and 18 cents. These are the price points where selling pressure overcomes buying pressure, causing the price to stop rising and potentially reverse downwards. It's like hitting a ceiling. When the price reaches these levels, some investors might decide to sell, expecting the price to drop. However, it's important to remember that these levels are not set in stone. Market dynamics can shift, and these levels can be broken. When a resistance level is broken and the price goes above it, that level often becomes a new support level, and vice versa. These levels can help investors make informed decisions about when to buy or sell. By understanding support and resistance, investors can better anticipate potential price movements and adjust their strategies accordingly. It's all part of the fascinating dance of supply and demand in the crypto market. So, what does the future hold for Dogecoin? As we dive into the intricate world of cryptocurrency, it's clear that Dogecoin has been able to maintain its stride despite the bearish market sentiments. The resilience shown by this digital currency is nothing short of impressive. Currently trading at around 15 cents, Dogecoin has held firm above the 100-day EMA mark, aiming to surpass the 16-cent mark. Now that's what we call tenacity, but let's not just focus on the present. Let's look at what the future might hold for Dogecoin. Analysts are predicting that Doge may regain strength and momentum in the upcoming sessions. This prediction is based on a neutral price structure with potential for a significant pullback. Yes, it's true that the development activity for Dogecoin has seen a decline recently, but let's not forget that the world of cryptocurrency is like a roller coaster. Ups and downs are a part of the ride. And if the derivative data is anything to go by, there's a suggestion of short covering. This could mean that despite the decrease in development activity, there's potential for growth. With a total supply of 143.81 billion Dogecoins and a volume to market cap ratio of 0.0879, the statistics paint a promising picture. The support levels are at 14 cents and 13.5 cents, while the resistance levels are at 16.5 cents and 18 cents. What does this all mean? Simply put, it shows that Dogecoin has the potential to bounce back. It's like a boxer in the ring, taking hits but refusing to go down. The resilience and potential for growth are evident. While the crypto market remains unpredictable, the data suggests that Dogecoin is a resilient player with potential for growth. So keep your eyes on Dogecoin. It's a player that refuses to be benched.